we're encouraged by the way things are developing in the last few years. In particular, there's been increased regulation around sustainable investing. The demand for sustainable investing from our clients and the way they look at investing has increased massively. Also, the green bond issuance and sustainable deals that we're seeing in terms of the way they're structured, in terms of the use of proceeds and third-party verification has increased. And so we are very much encouraged by the way things are developing. I don't think fixed income is overlooked when it comes to sustainable investing. In particular, over the last few years, we've seen an increased amount of issuance of funds. Our fund obviously has been around for nearly 2 decades. We're seeing an increase in issuance of fixed income assets related to this. In particular, over the last 12 months, we've seen a massive increase in sustainable green and sustainability linked bonds, taking the total issuance possibly this year close to $1 trillion. How that compares to equities is that, of course, there's huge amount demand for sustainable investing in the equity space. But there's a key difference. A lot of the equity stuff is embryonic. It's early stage, big growth businesses. Whereas in the fixed income space, what we're looking for is cash flow generative businesses, securitizations of deals. So as the market becomes more mature, we'll see an increase in fixed income as that cash flow gets generated. And that's the space that we go fishing in. I do think that COP26 will achieve something. We saw from previous Paris Agreement that we started to see companies reporting on carbon, and the focus was on the climate. I think post this COP26, we'll see increased regulation coming down the pipe, forcing companies to report on what they're doing, what carbon output they've got, what climate impact they're having, KPIs, as well as waste output. And as fund managers, that will then give us more opportunity to be able to look at companies on this basis and a level playing field so that we can decide which companies we want to support that's going to have an impact on the climate beyond 2030 to 2050.